Good morning, everyone. Morning. It's Friday. It's the 10th of January, and this is the DAX technical analysis. And in connection, obviously, with the website, thedaxtrader.co.uk. I hope you're all well. I hope you've had a good week, and I hope you are in better health than me. Only because at the moment I am still suffering with this sort of chest cold that's sat right in sort of my lungs and my throat and is not allowing me to recover. So, before we proceed, trading financial markets is risky, and that involves the risk of losing your invested money. We don't provide financial advice here. This is for educational purposes mainly, and all trading decisions should be at your own risk. We are going to be looking through our trading strategy today, as well as some of the news outlooks, and let's take a jump into the charts in just a moment. All right, so yesterday was quite a lot more subdued than the previous day. We'll take a look into that in just a moment. But I think today we're going to be probably looking for a bit of further consolidation as we move up into the US non-farm payrolls. And so that's going to be later on today. Probably looking for something around the 160 to 180 print. I think 175 is a potential expected amount. The yearly wage growth, things like that, probably worth looking at as well, but I'm not probably going to spend too much time discussing the NFP. I think it's probably an overrated event. And there's some events coming out in Canada as well today. Got the monthly labour market report, which is important considering that last month's reading was really disappointing and there were rate cut speculations and things like that over there. So that might be an interesting one to watch out for, especially for our Forex trades. And then, of course, we've got the Iran-US conflict and combination of a de-escalation and some decent US data and trade war optimism and Fed indicating that there are no hikes has contributed to an environment that has allowed a bit of a rebound in the global risk appetite over the last few sessions. So perhaps that's expected to continue today, and basically meaning that probably looking for a bullish outlook today. Now, we're already up right near the all-time high, only about 100 or so points. In fact, less than that now, 70 points below the all-time high on the DAX. Needs another push to get there, but the gap higher this morning suggests that the appetite is there. And we just want to see now if we can continue to forge these successive series of higher highs and higher lows. Okay, what else have we got? I think there were a few things that came out overnight. For example, the House was going to be looking to provide less powers towards declaring war and things like that. All comes back to that de-escalation piece that we just spoke about there. So, yeah, certainly looking interesting. Oh, of course, there was the plane crash that seems to now being investigated, as it looks like it was actually caused by missile. Depending on wherever you read the information from, could well be propaganda, but certainly would be interesting if it does turn out that it was a missile strike. Who would have created that? And certainly the fingers start to point towards Iran. So we'll see what fallout comes from that as we learn more from the investigation. All right, so that's pretty much the main thing on the news front. So certainly NFP is going to be the main market mover. Aside from all of the US-Iran talks at the moment, it's just crazy how the market loves a distraction. As soon as Brexit was, or the election was complete in the UK and Brexit looked like it was pretty much just going to happen, despite the fact that there is a huge amount more work left to do and there's nowhere near completion of that. But as soon as that was complete, it was almost like the market didn't care anymore and it needed a new distraction. I know that's horrible to say, that what happened in Iran was just a distraction, but there's always something, isn't there? There's always something for the market to use to create this fear and an uncertainty. It's just the vehicle that the market likes to use. Anyway, moving on. Let's get over to the DAX chart. So on the 60-minute chart, first of all, let's try and open that. You can see this leveling off of this epic rally that we've seen. And at the moment, trading sideways inside a narrow range for today. And yesterday's trading range was also relatively subdued, but still has continued to build on the lows that we found down here, just above the 950 level. So 960, all the way up to the current high, which was formed this morning on the gap, which would have been 13,540. So we're still creating brand new 2020 highs, and that would also mean 2019 high was broken again, or has continued to stay above. But for today, really what we want to see is probably completion of the gap close. It's failed a couple of times to do it this morning, and then a continuation move. Whether it dips into a bit more of a pool of demand, then that would be fine. It would look a little bit more bearish when it does that, because I mean that's a good 100-point decline. But there's probably plenty of stop losses down here that would be forming that demand, or that providing that demand, that liquidity, in order for the market to move back again. So do you want to buy up here is the question. I mean, when you consider just how far the market has moved, it's easy to say no. So it's probably quite a popular move to wait for slightly lower pricing. But like we've seen before, the DAX is a freight train. It does like to move. Doesn't really care about where you want to enter the market. It just does its own thing. It's very, very easy to be left behind as it just rallies through the major levels. All right, the RSI strategy has provided a couple of signals over the last few days. There's no point in really looking into that in any great detail. It's quite a simple strategy. We've covered it in a couple of webinars, so I'll invite you to go and look back through those if you want to find out more information about that. Okay, over the last few days, I've talked about how the 5 moving average is moving below the 8, which is a typical warning sign. But what we've now seen is that we're now comfortably back up above, and things are pointing bullish again. Now, it looks like there's probably going to be an interesting bullish signal on the strategy. So go and get yourself access to yours. I'm not going to be trading. It's not even bullish. It's actually bearish. Okay, interesting. So sell signal has come out on the strategy. I'm going to ignore that for the moment. But keep an eye on that if you've got access to it yourself. Now, just before I go back to the charts, I want to answer a question that I had from one of you guys regarding this, and that is, once I've given you access to the strategy and I've installed it on your system, what you might need to do is restart Sierra Charts in order to see it. And the way that you would see it is right-click Studies, and then you go down here, Add Custom Study. Okay, when you click on that box, you should see the DAX Trader DTI here. All right, so you can just double-click on that or press Add, and it will add it to your chart. Now, doing that is great. It will open it up, but it doesn't show you this particular template. So what I can do is send you a study collection, which is a template file, basically. And what you do is you download the template file, you open up your Sierra Charts data folder, which for me is in my C drive, and then Sierra Chart. And then you go into the data folder here, and you click and drag the template file in there. Okay. Once you've clicked and dragged the template file in here, anywhere in there, it doesn't matter, you can go back to Sierra Charts on any chart that you like, go to Analysis, and then add the name of that template. You'll see it in this list. Okay. And that's it. And then it will just, you'll get a chart that looks like this. All right. So that's that. Hopefully that answers the question, Steve. Excuse me. Ugh, God, I hate this this chest thing. All right. So, what's the reason that I'm not going to be taking this? The reason that I'm not going to be taking this is because the Asian session range is within this level, which is only about 36 points. And we've just seen ourselves turn bearish on what appears to be a non-event, a non-mover. So we've actually broken inside a mini range within our overall Asian session range, which is even less. It's only about 27 points range. We've tagged it and failed to break above it, and we haven't really moved anywhere. So there is no significant momentum in order to jump into this trade. So this is more likely just going to get bounced around, just from my experience, and I may be wrong. But plus, because I'm in a webinar, I'm not interested in opening up a trade just at the moment. Okay, so where do we get to? We were here, I think. Yeah, we were here. Okay, so this is the third time that we've reacted inside this zone now. Third time we've reacted inside that zone. So if we do get back down to there, it does certainly suggest that there is a support zone down there and a demand zone. People are looking to quite happily get long in that area. So we continue to build from here. Where's likely to be the most obvious target? Well, it's just got to be the... Excuse me if that sound came across there. I just bashed my microphone by accident. But the most obvious target has got to be the all-time high line, which is this one here, 604. Beyond that, you're probably going to be looking at the quartile once more of this pitchfork, and long-term target, aspirational target, if the market just decides that it's crazy and it wants to continue moving, would be the upper median line parallel. But that's crazy. I mean, we're talking 14.7. No, we're not. We're talking 14.2. And yeah, I was going to say 13.7, but it's even higher than that. 14.2 is pretty... it'd be pretty impressive if we get there, but that would be a longer term aspirational target. In the short term, however, this is what we're currently working with. This is yesterday's price action. It was a neutral looking distribution, but it was skewed to the top side. And we've got this large tail down here, probably caused by the morning session, where there was not a lot of volume traded. A gap, attempted close, and then just a trickle all the way up to the highs. But if we break to the downside just to start with, breaking through this upsloping low to low trend line, then the obvious spot to look for would be the value area high. Tag that from above, see whether that holds. That would also complete this gap close. If we get below the value area high, then obviously watch out for the point of control, which is currently at 13,479. Excuse me. I'd like to see that hold. The pivot is down at 465, value area low at 464. But yeah, we will see how far that jumps down. Excuse me. Measuring the high of the day down to the low, we've got this mini range for the moment. If we break below this upsloper, then an extension of that move would see us down towards the point of control. But that would be for the scenarios for the downside. Upside scenarios, well, I mean, really we don't have that many options here, but we are in a compression pattern at the moment. I'd like to see some other break or some other relative move similar to the one we just talked about for the length of this range for the move to the upside if it breaks. Now, we don't have any exposed points of control or anything like that above us because we're pretty much at, what, nearly 2-year highs. So it's unlikely that we've got anything to really go on. So we're in uncharted territory technically at the moment. We've just got to look at the economic environment and ask ourselves, are conditions ready for the market to continue to grow? And when you consider the things like what we talked about a moment ago with the Iran-US de-escalation and some of the numbers that are coming out at the moment, you could definitely argue that the answer would be yes. Okay, one of the last charts I'm going to show today is this one, which is the initial balance. I can't quite frame it on the screen very well. There we go. That's a little bit better. If I just skip back to the previous day. So this was actually on Wednesday. You can see that Wednesday's price action, and I talked about this yesterday, Wednesday's price action had an interesting break through its initial balance, and it caught a range extension of 150%, which is the target I'd normally aim for, without any major risk. Well, there was no risk. I think you risked 10 points. That's how much it dug in. Your stop loss could potentially have been about 36, 37 points, but you gained 102 on the move. All right, comfortable range extension to the upside. Now, yesterday, completely different story. The range itself was, 70 points or something like that, initial balance. But there were no attempt at, well, there was one attempt at a range extension here, but there was no significant follow through. It was unable to make any momentum. So yeah, it's interesting. So this strategy is definitely never guaranteed, because obviously what you're going to be doing is going long on a break, which you would have potentially done here, and you would have been stopped out there. All right, and yesterday's profile, you can see it's pretty compressed here. Neutral looking profile from 8 a.m. In fact, we stayed within the initial balance, as you can see here, pretty much for the entirety. The value area was central to the profile. The point of control was central to the value area. But we did actually close above both. So that alone is bullish. But the main bullish sign is the fact that the entire distribution range sat on top of the entire distribution range of the previous day. That doesn't happen very often. And when you consider that the following day, i.e. today, we've already broken above the distribution range high of the previous day. Excuse me. Oh, this is horrible. I wouldn't wish this on anyone. But when you consider that we're already above the previous distribution range high, then yeah, the momentum is still pretty strong. If you want to know more about volume profiles and that sort of stuff, I do have some materials which I'll be sharing with my trade development members, and it's a bit of a course just to sort of how to break down all the different components of market profile and use it within your own trading to get into making trading decisions. All right, so we've already taken a look at the strategy, but it's the same as I mentioned a few minutes ago. For the moment, I'm probably going to ignore these sell signals, but if it does continue and it creates a bit more momentum in the short term, then I might well be interested to fire a bullet at this one. Yesterday, however, poor, and it's exactly what we talked about before. There was no momentum. We stayed inside the initial balance for the entire day, and so this strategy is a momentum strategy, and we didn't get any. So I think I fired one bullet at this yesterday. It didn't work out. I didn't fire any further. Didn't see the conditions were right, and pleased that I managed to preserve some of the capital instead of firing two more bullets that would have lost. So that's sometimes the thing with trading. I can appreciate that you guys want to see action all the time. You want to get into trades. You want to trade as often as you can, make as much money as possible. I get that. That's fine. You want to do that, then please do. But capital preservation is just as important as making it. Okay? So you got to make sure that you're not just firing off your stack. It's poker terminology. And trying to steal every pot. Get every trade working in your favour, because it's not going to work. Right, guys, I think for today, that's pretty much what I'm going to do. Give my voice a rest. I'll leave it there. If you've got any questions, fire them over to me either on WhatsApp or Telegram. Get on the website, thedaxtrader.co.uk, to find out more information about anything that you need. Contact me from there. And yeah, hope you have a good trading day. Enjoy your weekend. And we'll speak to you soon. Before I go, I've got a couple of questions here. Is this a live market right now? Is this a live market right now? Well, yeah, of course it is. It's the DAX. But if you're talking about because we're back a little bit, it's because I locked the screen and I've moved away from the day. So I'm scrolling back through. But yeah, of course, it's a live chart. Morning, Junior. Please comment on how the pivot point is calculated. Right, pivot point. I think you're probably talking about this one. As far as I'm aware, it's just a standard daily pivot. So it's the regular calculation. There are loads of different calculations, but I believe this is the standard one. So I know that you've got your pivot, that you like to use that you've calculated. This is not that. It's just a standard daily pivot. So I'll go into the details for the study on this one, which is... Okay, formula type is 0. And if you want the calculation, let's just go and find that. Sierra charts pivot point calculation. Let's just bring the screen over. Excuse me. What do we got? There we go. Formula type 0. That's the calculation right there, Junior. So it's yesterday's high plus yesterday's low plus yesterday's close divided by 3. All right. And the thing with this, certainly with Sierra charts, is that you've got 1, 2, 3, 4. I mean, quite a lot of different calculation methods you can use. There's 26. Well, it might even be 27 because I think it's a 0-based one. Yeah, 0-based. So there's actually 27 different calculations for the formulas, and you can affect that in the formula type value. All right. And I'll just make sure that that was the pivot that I'm using, actually. Great. Oh, no, it has. It's disappeared. All right, good. I was hoping it wasn't to do something else. Okay, so there we go. But yeah, I'll give my voice a bit of a rest, guys. I'm going to leave it up there. Thank you for joining me. And Jay Junda, I hope that answered your question. But yes, it is a live market right now. All right, guys, have a good one. And I'll